Hello everyone, good evening. Welcome to this highly anticipated seminar on integrating sustainable development with intermediated finance. It's truly a privilege to be here with such an esteemed panel and audience as we tackle one of the most pressing challenges of our time, bridging the global infrastructure funding gap while ensuring that our investments are environmentally and socially sustainable. This seminar builds upon the momentum of our previous discussions on environmental and social safeguards in financial intermediation. This is done as part of the MCDF grant to AIIB supporting the ES community of practice, where we laid the groundwork for understanding the critical role of financial institutions, multilateral development banks, and the private sector in driving sustainable development. Today we aim to go a step further, diving deeper in how we can translate these discussions into actionable strategies, innovative solutions, and tangible outcomes. In an era where the urgency to address climate change, biodiversity loss, and social inequality is greater than ever, we face a tremendous challenge, but also an opportunity. The infrastructure funding gap continues to widen, and the question that we need to address is, how can we effectively mobilize capital, implement robust ENS safeguards, and ensure that our investments not only yield financial returns, but also contribute to sustainable and inclusive growth? Our panelists today bring a wealth of experience from different regions and sectors, and we're very fortunate to have them with us to share their practical insights, challenges, and lessons learned in applying ENS safeguards in their respective institutions. They will tell us more about navigating complexities of diverse ES standards, how financial institutions can champion sustainable finance while addressing their clients' needs, and the ways in which growth can be harmonized with our commitments to ENS responsibilities. Now, to set the stage for our discussion, I'm honored to introduce our first speaker, Rong Zhang. Rong Zhang leads the Environmental, Social and Governance Networks and Thought Leadership at the International Finance Corporation, part of the World Bank Group. She has been instrumental in building and expanding the Sustainable Banking and Finance Network, or SBFN, which serves as a public-private capacity-building platform bringing together financial regulators and industry associations from emerging markets to advance the sustainable finance agenda. Today, we have the privilege of hearing Rong's insights from the IFC perspective on ENS safeguards, the trends and opportunities in emerging markets. So with that, dear Rong, welcome to the stage, and the floor is yours. Thank you.
Thank you, Ines, for the very kind introduction. I was planning to say good afternoon, but I heard you say good evening, so good late afternoon. Thank you for staying on for the last session of our AIIB's annual meeting. I'm very honored, and thank you for AIIB inviting me for this to the beautiful country and this very important discussion. So to help set the scene, I want to share some observations and also experience on the environment social regulation in the emerging market, but in the context of broader sustainable finance regulation. Here's my slide. Ines touched a little bit about SBFN. So what is SBFN? It's a sustainable finance capacity building network of financial regulators and the banking association from emerging market. So of this week, we have 72 countries are represented in the SBFN. The collective goal of this diverse group of public and private is to advance sustainable finance and achieve measurable goal in line with international standards. Specifically, we're looking at both on the risk side, managing environmental, social, governance risk, including climate and nature, but also opportunity to increase the capital flow to activities with environmental social benefits. And 12 years in making, and started 2012, the members has made tremendous progress. And just give you two examples. One is on the policy side. We're starting from 2 policies in 2012. This year, from the measurement, is 400 plus policies, and half of them, more than half of them, from our own members, those regulator and banking associations. And you probably from financial sector, you'll say, what's the number? Tell us the story. So I give you a number. $759 billion in thematic bonds were issued across 45 member countries, all from emerging markets, in 2023. And this is 25% increase compared to 2022. So I told the story from 10 member countries in 2012 to 72 as of today. SBFN now represent 92% of banking assets in the emerging market. And the membership confirmed 3 unique value propositions of this network. First, emerging market focus. Second, public and private partnership. And third is access to IFC's technical assistance, which are offered to all these countries. And so the members can benefit IFC's technical advice and support from IFC as an ESG standard setter, impacts investor, and the global convener. I saw some of my colleagues in the audience. They are from the region. They are in the forefront to provide such advice and support to our member countries. So since 2018, members said, we want to measure progress. There's so many countries, so we want to compare apple to apple. So they actually help to start a measurement framework in 2012. So we started already on systematic measure member progress based on methodology, particular in 3 pillars. Environmental social risk management integration, ESG integration. Second, climate nature risk management, and this is added on in the second round of when we started, this very focusing on ESG risk management. Of course, also financing sustainability. So in the word of regulator and banking association, ESG is not in isolation. It's part of the sustainable finance risk and opportunity. So we did 2024 Global Progress Report we launched during the World Bank Group IMF Annual Meeting in spring this year, and also offered a data platform to capture all the progress over the years so you can compare the progress by country, by region, and globally. And we all mentioned the 3 pillars. So let me highlight key findings for each pillar. Number 1, and particular for today's discussion on environmental social risk management regulation. This year's assessment confirms the environmental social risk management and the disclosure framework are the backbone of sustainable finance. 39 countries already launched such frameworks with IFC's support and focus on building alignment with international standards such as IFC's performance standards. On the second pillar, climate and nature risk management, the member progress on this pillar is significant. And 2021 is only 4 countries have such management framework, and here is 34 countries. Financing sustainability, I already mentioned number at the beginning, but that number is also a result of 47 countries launched framework to promote capital flow to green, social, and sustainability goals. And particular highlight is the taxonomy and the thematic bond guidance. So now I zoom back to the ESG risk management. The ESG integration frameworks have been mainstreaming among the SBMM members. This is not the same when we started 12 years ago, and they confirm, again, this is the foundation of sustainable finance regulation, and this including a whole set of different regulations from the guidance to tools provided by regulator or banking associations. And the particular key feature on my right side are the risk management regulation included. You're probably interested. I would just highlight some of them, particularly on the board-approved environmental social risk management policies, including environmental social management system. This is the core foundation. And second is requirement for the organization structure and capacity building. And third is also exclusion list and external communication mechanism reflect increasing reporting and disclosure policies. And implementation guidance tools I mentioned, there are 39 countries and whole toolkits of different assessment, sector guidelines, and reporting template. And also, early on, we found it so difficult to get the data, particularly on environmental social risk management. But this year, we found 1/3 of the SBFM members has established a systematic ESG data collection to track the implementation of financial institutions. It's a busy slide, but this is an example of our sustainable finance, particularly ESG safeguards, and reflect on the taxonomy, which is mentioned in a number of sessions early on. It's one of the most important tools to direct capital flows to projects that have environmental social benefits. There are it's 47 taxonomies already, so cause the issue of fragmentation and inconsistency. So it's very important to work towards interoperability and comparability of those policy frameworks. But there are some key elements we see the emergence among all the different taxonomies, and that is the environmental social safeguard and risk management. For example, on the left and first is the EU introduced a concept, do no significant harm, and DNSH to basic to other environmental objectives has been widely adopted, and also of minimum social safeguards, which put the spotlight on labor and human rights. The ASEAN taxonomies and the version 2 already also offers the guidance on the do no significant harm, and as well as the social safeguards. So these are the two regional taxonomies and cover a wide range of countries. But there's also innovation in the country, the taxonomy regulation, and National Bank of Georgia has a little bit different approach. So instead of embed do no significant harm in the taxonomy, they launched an environmental social risk management guideline, which apply to all the activities across all the different, both banking and the capital market, and including all the activities defined in their environmental and social taxonomies. And they're one of the countries actually have a social definition of social activities, very few of them. So again, you heard this word. I tried to learn about the pronunciation earlier. Interoperability of different taxonomies and ESG safeguards. The IFC released a comprehensive research report and also tools exploring the alignment between the IFC performance standard, which has been exist for many years, and the EU taxonomies do no significant harm in the recent years. And the research provides a comparative analysis between not only the IFC performance standard, but the sector guidelines, which we call EHS guidelines, cover more than 30 sectors, and the EU taxonomies, the 4 generic do no significant harm criteria, and the minimum social safeguards. So we found that there is a large level of alignment between the EU taxonomy and the IFC's performance standard and EHS guidelines in terms of the ES and E&S topics to be covered by the 2 frameworks. Second, the impact area to be assessed. And third, the sectorial coverage of each framework. So our conclusion is the performance standards guidelines represent a useful and credible framework to satisfy the requirement of EU taxonomies do no significant harm, particularly outside EU. So, So conclude on the research we did this year, and there's 4 particular recommendation on the policy integration. So first is, again, talk about the fragmentation of policies. It's very important we work together to have harmonized approach on safeguards for clients, both on the financial institution and the firms level. And second is building capacity. We probably will hear a lot, the capacity for regulators, for firms, and for the market. And I particularly want to mention the IFC provides technical assistance in the Central Asia, we call ESG advisory services. The initiative aims to improve both the landscape of sustainable finance, both a regulatory, firm level, and also the market, meaning that to help the market building capacity so they can serve the financial institution when there's a need. And third, it's also monetary reporting. We heard a lot. This is a global trend and very important for the financial institutions as well. But finally, we heard, again, this keyword of partnership. So it's important the financial institutions, the MDBs, and the government, civil societies working together to create an enabling platform to support financial institutions to deal with all these challenges, but also embrace opportunities. I will not go through, I have a number of tools of IFC provided, but I want to mention this AI. IFC has AI, we call it Malina. It's a machine learning environmental social analyst. It's an amazing tool and it's public available already. So the particular, they can access huge amount of information and they can read 19,000 sentences in 1 minute. I was trying to how much I can read myself, but not only the amount of information, but also extract insights. So they can actually provide, they call sensitive, negative, neutral, and a negative to help us to make decisions, particular, in the very limited resources that we have. And one of key tools we have is environmental social risk management system for diagnostic tool. Again, I will not go to, it's all public available. They're really providing the fundamental requirement for environmental social management system in 9 key elements. I will not go through detail, but it's very important for financial institutions, for themselves, and for their clients. And also, first, for sustainability is a platform. You have all the information built by IFC and our partner DFIs and MDBs. And this is one of the tools, but we only have 10 minutes, so there's so much information out there. But in conclusion, so there's the financial institution is not alone. You have a regulation, you have a market, you have tools, and MDB supporting for your development. Thank you very much.
Thank you so much, Ron. That was a really good, insightful presentation. I think we will keep those 4 recommendations in mind, definitely. And we can see that we cannot escape AI. Even ES specialists get caught up with AI. So it's a new age, definitely. Thank you very much, Rong, for that very, very rich, full presentation. I'm sure that participants will be able to take away a lot from that. As we continue this panel discussion tonight, I'm now delighted to welcome the rest of our speakers for this session. So I will first invite Mahia Junaid to the stage. Mahia Junaid is Additional Managing Director and Chief Operating Officer at Citibank PLC. Mahia Junaid started her career in 1994 in Citibank, Bangladesh, but then she moved on to Citibank, which is a different institution, in 2007, where she serves as a Chief Operating Officer and has been serving as a Chief Operating Officer since 2019. She's the first female Additional Managing Director in Citibank's history. She's the director of the board of IDLC Finance Limited and Citi Hong Kong Limited. Impressive, Mahia. Impressive. Next to the stage, I would like to call Mr. Gergely Pokos, Executive Director of Green Program Directorate at OTP Bank PLC. Gergely is, like I said, the OTP's bank's Green Program Directorate Executive Director. He's responsible for the bank's ESG business transformation. Before OTP, Gergely was with McKinsey and with the Bonifarm Group, which is the largest agriculture company group in Central and Eastern Europe. Welcoming back Rong Zhang. Again, you have to do a bit of walking back and forth. Thank you so much. Thank you for joining us on stage again, and thank you again for the presentation. And last but not least, I would like to call our Alex Haji Ivanov, Senior Environmental and Social Specialist from AIIB. Alex works on environmental and social assessment of sovereign and non-sovereign projects. With 30 years of experience in environmental and climate assessments, he has been working on research and development, design of investment products, policy dialogue initiatives, and technical assistance programs. Prior to AIIB, Alex had worked for EBRD for 15 years, focused on climate finance products, blue economy, and climate risk assessments for private sector clients. Alex also worked for Strabag Slovakia, NC Norway, and the Slovak University of Technology. So now that we have, thank you, give a hand to our panelists. Now that we have them all on stage, I will walk over and take my seat, and then we can dive right into the nitty-gritty and the discussion. So I would like to start tonight's panel with Mahia first. So Mahia, wow, first female managing director. Congratulations. And I would like to hear what is your experience and also some of the challenges that Citibank Bangladesh faces working with different standards and requirements. I mean, we've heard a bit of what Rong has, mentioned, all the different standards, taxonomies. Yes, we are trying to harmonize, but it's still, there's a long road ahead of us. So, in Bangladesh, you're probably working with IFIs that partner with you, such as IFC, the Central Bank of Bangladesh, the Ministry of Environment. They all have their own requirements. So while we know that these standards are similar and are becoming more and more similar and converging, how do you reconcile the differences? How do you approach the monitoring and reporting under these different standards? What advice could you give to the audience?
Hi, good evening. And first of all, thank you very much for inviting me to this grand event and to this beautiful city of Samarkand. To start with, let me just give you a little background of how the ESDD standard works. In Bangladesh, we actually had the Conversation Act. This was done in 1997, and only in 2023 was it actually revised and updated. So as you can see, it's not something that has been really looked at or really focused on. But last few years, the central bank has also been working on this, and our industry, like the Ministry of Environment, we call it the Department of Environment, DOE, they are also working on it. So for us, the central bank has given us certain standards to follow. So those are basically a list of a checklist kind of a thing. They gave us like a 50, 60 questions, and then we have to go through each of them and answer, and then you have to do a risk grading for that. So each client is basically risk graded as, first we have to go through the exclusion list, and then after that the risk grading is done through that questionnaire or the checklist. So each client is actually rated as high risk, medium risk, or low risk. This doesn't mean that we are not going to finance a high-risk customer. It's just that we have to have some action plans probably to bring them up the standards. That's where we come in, and that's where we help the clients to basically upgrade themselves. So whenever a big project is done, you have to get, first of all, from a land clearance kind of a thing from the government. After that, if it's a big project, and if it's a project like a power plant, or let's say a textile washing or dyeing industry, or let's say leather, like we have raw hide, they process those. So if this kind of industries or manufacturing industries are set up, then you have to get a ESS clearance or ESS certificate from the government. So we go through this, and then we get the certificate done. The central government is really not so technically up to date on this thing. There's a lot of capacity gaps there. So it takes like 4 or 5 months to get all these clearances done. So once the clearances are done, then they're ready to set up the project. So once the project is there, then they need to, like if we are financing, or if multilateral is financing with us, they give us their standards. Like if IFC is doing it, so they give us their IFC performance standards. So that's another set of questionnaires or requirements that we have to meet up. What we have done, like with IFC, is since the central bank's requirement was basically this questionnaire kind of a thing, a checklist kind of a thing. So IFC helped us formulate a similar standard or similar kind of questionnaire kind of thing for like around 30 questionnaires, which we fill out for IFC. So whenever we are working with any multilateral, they come up there with their own standards, and then we have to redo it. So that takes a lot of time, and especially the customers, unless it's a big, huge project, they're really not interested to invest on this. As you know, we are a very export-oriented industry. Our main export is garments. So for garments, actually, it's mandatory by the buyers that you have to go through the ENS standards and you have to upgrade yourself. But for the other manufacturing or the ones who are not really exporting or who are producing for the local market, they're really not interested because it doesn't really help them to upgrade unless there is some gain. So what we do is we kind of help them build up their capacities, but doing it for different multilaterals and following different standards actually is challenging for us, and we are facing that challenge, and we are trying to work with the multilaterals to see if they can come up with similar standards as the central bank, so that we do not have to go through each of, like in our bank, we have a software, actually built a software which does the calculations for the risk grading. So we have it now for our central bank and IFC, but we do not have for, let's say, when we onboard AIIB or we go work with ADB. So whenever you guys will give us standards, so we have to really build it in, train our people to do that. So that takes like time for us to maintain or be compliant with each of the standards. So that's a challenge. We are trying to work with the multilaterals and trying to see if we can, come up with a common standard.
Thank you so much. Yeah, that's very insightful, and it's very challenging to work with multilaterals, and I have Alex and Ron here at the end of the panel to grill you on harmonizing and converging.
I'm with you, absolutely.
Yeah, navigating multiple standards and requirements is really complex, and I'm sure you know that your experience will help similar institutions learn lessons from facing similar challenges as you. But now over to another private institution. So Gergely, you are in OTP Bank Hungary, and OTP is, I would say, a leader in, it operates in 11 countries in Central and Eastern Europe and Central Asia. And I'm sure, similar to Mahia, you have clients that are quite advanced and they are proactive, they're interested in raising their performance and reporting for whatever reasons they have, but I'm sure that there are some others that don't really see eye to eye, and, they don't see the immediate benefits for international ES standards. So let's hear from you, from the European perspective. We've heard from Mahia, from India, from Bangladesh. I do apologize, I was going to say Indian subcontinent, Bangladesh. Could you share with us some of your experiences and the lessons that you've learned from your perspective in Hungary?
Yes, first of all, let me say thank you very much for having me here. It's a great honor, and also on behalf of OTP Bank, because it's not only a great honor for me, it's a great honor for OTP to be invited to such a prestigious event. As you know, we are a bank from Central Europe, but we now operate also in Central Asia, trying to grow not only organically but also with acquisitions, and so this is a new frontier for us. But we are very grateful to be welcomed by the government of Uzbekistan, also by AIIB, which has been our partner for some time now. So coming back to the topic of standards and the practical application of these, I really feel your pain. We all do in terms of standards. Let me take a little bit of a different approach of telling you about our experiences. Let's look at the client side, because the financing that we receive or other banks receive from international institutions or even from the capital markets has to end up at the client. There is a project at the end of the line who actually has to do it, and most of the time these are not environmental and social standard savvy people necessarily. They may be very good at building houses or erecting bridges or setting up you know, electricity systems, but they don't know about this all these things, and the money is there, the project is there. We have to connect the two. Basically, we have learned, and I don't want to pretend that we have some stone of wisdom about this. We have tried and failed, and then through this process we have learned a lot. What we have learned is really there's three things or three approaches of how we can benefit the client, benefit the project, benefit our own business, and also adhere to the whatever international standard or national standard for that matter we have to adhere to. Number one, we are trying to make the process as painless as possible for the client. A lot of the times in a lot of projects you can actually, as a bank, it's not easy, but you can actually as a bank almost completely remove direct client input from setting up an ENS system, especially in clear-cut cases like investment in renewable energy. Throughout the past 2 days, there was a lot of talk about investment in infrastructure and especially renewable energy. Those projects, you can set up a system where you don't need their direct involvement or very little of it, and they will be very grateful for that. You still get the same data, still get the same numbers. I'm not saying it's easy, not necessarily possible everywhere, but in a lot of countries it is. So that's approach number one. Approach number two is we also want to include the client, have a discussion with them on the topic. It makes no sense to flood them with request-rich questionnaires if they don't know what it's good for. And a lot of the times, it will turn out that once they understand what this is for, once they understand the context, and they don't necessarily read, you know, EU taxonomy or EBA directive number, whatever, and the long, hard to understand document, but they talk to a real person, and that person tells them, listen, for this financing, there's a couple of things you need to do. If you understand that, they will actually understand, that's interesting, that's good for me. I will understand more about my project, more about the way climate change or the changing business environment impacts my business. And that's good. So conversation and really, you know, putting the effort into. Now, sometimes that's easier, especially with large projects. If you move to the SME segment or residential or you know, whatever, it's obviously you cannot talk to everyone directly, but you have to have that mindset. And point number three I want to make, and I think this is probably the most important one of the three. Apart from de-risking and apart from making sure we comply with regulation, and our clients also do, there is a substantial business potential, not only in financing these projects, but actually doing these projects. We recently completed a study of a big group of our clients. Now, these are Central European clients, but I'm sure at some point we will be able to make this study here in Central Asia also, on the financial performance of companies that do green projects. Let me just say green projects for simplicity's sake, and ones that don't. And the ones that do financially outperforms the one that don't through any geography, any time, any industry. I'm not necessarily saying that they outperform them because they do the green projects. I cannot say that. I'm not certain there's a causality, but there's definitely a correlation. So if you can show them the benefits of what they have to do, you can show them the benefits of, if you understand the risks that are involved in your business, and these adhering to these standards will actually help you not only understand the risks, but also overcome them. Whether they are transition risks or physical climate risks or whatever they may be, you will actually have a better business. Then you can take clients on board. And I think financial institutions, whether they are international big ones or you know, retail type situations or whatever, have a key role to play in this, because we have the manpower and expertise. We have to, because we are complied by regulation, we have to understand these things. So we need to translate this to the clients and make it as easy for them as possible, and we can all do business together at the end of the day.
Thank you, Gergely. I mean, I take three powerful messages from what you've just said. It's about you being agile and proactive and helping the clients manage their risks by you managing your risks.
Exactly.
It's about meaningful inclusion of the clients, where you need to explain to them that this is not, you're not being the bad cop, you're actually trying to help them improve their ENS standards, which ultimately will probably, in most probability, lead to financial benefits as well. So I think, these three messages are, very powerful to me, coming from the private sector. Yeah. So it's not just the multilaterals who enforce ENS standards, it's the private sector has come to realize that it helps you financially, helps your clients financially. So with that, I will turn to Rong Zhang. And, IFC has been a leader in the sustainability arena for such a long time. And, you've been helping your financial sector clients apply IFC performance standards. I mean, we've heard some of that in your presentation. But, it's not always easy. And for each client, the journey is quite different. What are some common lessons that you could tell us from the IFC experience? I'm sure that, many in the audience come from financial institutions. Some are exploring possibly collaborating with multilaterals such as IFC or AIIB. What can you tell us? How do they start this journey on, enhancing their ENS standards, upgrading their systems and procedures? What are some points of advice for them in this journey, Rong?
Yeah, thank you, Ines. Yeah, indeed. I think each client's finance journey is unique. So applying IFC's performance standard is not one-size-fits-all approach. And it requires deep understanding of a local context. It requires flexibility and also the ability to align sustainability with the business priority. You need to speak the language. I would, again, maybe the two fundamental advice I would provide. Number one is the foundation, I think, is internal governance of the bank's financial institution, that including ensuring senior management buy-in. You need the clear mandate. So it's not only a small one or two people's probably sitting in the baseline, in the basement, but actually it's mainstream. So there's responsibility of the board members, of the senior management, and the frontline operations. And also you need to build expertise, so have a dedicated environment social risk management team. So this very important with all this structure that the environment social risk management is embedded in the decision making. So that's first advice, internal governance, complicated. But second, it's also, I think we advise our clients on different levels of environmental social management ability to set realistic goals. You cannot just become expert overnight. It's very important to have milestones so you can, over the time, building your ability and eventually, like I said, integrated and embedded into the risk management and also the core ability in the overall risk management. So that's kind of I think that dealing with many financial institution clients, I think that's fundamental. And I mentioned some of the tools out there, so you don't have to learn always reinvent the wheel. The diagnostic tool I mentioned really providing the foundations financial institutions need to do, the 9 elements, and that's building environment social management system. Again, starting from there, over time, building capacity, then more matured internal governance system, and they can be there. Of course, with capacity building for financial from the MDBs and also the market. And I mentioned earlier in my presentation, it's now 12 years ago. I joined as IFC 21 years ago when we started to build performance standard. I was in the policy team. I received many empty stares when I mentioned environmental social risk management, but now it's already a term. Some of the clients are even passionate or know more than me. They can integrate it into the national context. So I think the landscape has changed. And also, I think Greg also mentioned, I think sometimes you're surprised the clients of the banks are more advanced than you're thinking. So I think to have the business case tracking with the research are critical to not convince them and become a partner and turn this environmental social risk as not a compliance, but actually business opportunity.
Thank you, Rong, so much. And then again, 3 really good, powerful messages. I mean, we're stronger than Steve Jobs here, you know, with the three key messages. So yeah, it's governance and management buy-in, definitely, because you can only push so much, you know, if you're in the field and not on the top floor in the C-suite. Being realistic, definitely. Gold plating is never good, especially for clients that are just starting the journey. It's about doing a few things, but doing them right. And absolutely don't reinvent the wheel. There are so many tools out there. There's, you know, all major IFIs are doing more and more in capacity building on helping their clients by putting the tools out there just to be used and you know, developed further. Build up your systems using existing tools. I mean, those are good words, Rong. Thank you so much. Alex, last but not least, again, a question for you. Now, AIB is relatively young compared to maybe IFC, but it's, you know, it's accumulating very important experiences in the implementation of ENS policies with financial intermediaries, with financial banking institutions that are not multilaterals, that are new partners, that are just coming onto, you know, some of them are just coming onto the stage, some are very advanced, so there are different stages of their ES journey. But what could you say, what are the top 1 to 2 lessons that you have learned in working with FI clients across the large number of the investments that now AIB has in the FI portfolio, particularly in operations where AIB is the only financier, so where there's no World Bank, no IFC, no EBRD, no EIB. What are some of the most common challenges that AIB has encountered in this arena?
Thank you. Thank you, Ines. Does it work? It works. Okay. I risk to repeat myself. Now?
It's good.
Okay.
Is your mic on?
I think so. It's good. So I risk to repeat myself with the thoughts shared by the colleagues. And I'll start from the last of your questions, challenges. Okay. If to summarize, I would say capacity of the clients. What we see is a very diverse landscape of institutions. Sometimes we are dealing with top-notch, world-class clients which have all the systems, all the policies, all the processes in place to extent that we as MDBs can learn from them. And then there is also another set of clients where there is significant opportunities for improvements, especially building their capacities. Second, and again, this goes alongside the lines shared with the colleagues, fragmentation of policies, reference standards, approaches. We have seen a massive evolution of the ESG and environmental and social agenda over the past 10 years. And if to pick one number, I checked it actually recently, for 2023, the technical assistance spent by OECD countries, only OECD, accounted for $230 billion. Okay, I don't have the detailed breakdown, how much that goes into financial institutions, or how much that goes into environmental and social agenda, but taking into account that climate and environment is on the top priority, among the top priority of development institutions, then pretty major part goes into support. And we see qualitative change in the markets with the partner financial institutions, with the consultants, with the government agencies as well. Then a third challenge. I would put the ball in the field of MDBs, so international financial institutions. Our ability to translate our own policies and requirements in a plain, simple, understandable language, explaining to the clients why this is beneficial for them to do so. I pretty much go along the lines shared by Gary Lee. Not to do as I say because I say so, because you ask for our money, but explain the rationale behind it, the benefit out of that, the value added of applying these policies that way. So these were the challenges, I would say. Okay, on the lessons learned, I would say, again, on the approach, on the lessons learned, ability to listen the client. It doesn't matter how they call the standard, what they mean by that, but important is the meaning. and their capacity to assess and address and mitigate associated risks in their portfolio or at investment projects. And then ability also at our end to work out in collaborative way to find solutions. And sometimes pointing at the gap is not exactly the same as addressing the gap. Sometimes it takes longer time, sometimes it takes more efforts, work out together through implementation. I'll share, if you allow me, a quick example. I inherited a project with one of the commercial banks in our region. For a year and a half since signing, no disbursements at all, solely on environmental grounds. Yes, they have the policies in place. Yes, they have the system. Yes, they have enhanced capacity. No disbursement. So, okay, we start doing, learning by doing. I told them, look, come up with a simple project. We do it together, then we increase the complexity, and we gradually roll out. So this is my response. Shall I also respond on the question of co-financing?
I think you responded to the question. It was the challenges and lessons learned. I think we wanted to hear how AIIB does it on its own.
All right.
So you I think covered the basis, and I think you kind of nicely touched upon what Gergely mentioned and also what Rong mentioned. So it's definitely a two-way road for MDBs and private institutions, private finance. You learn by doing, but you also listen. Like Gergely said, you listen to your clients, you include them. And this goes for multilaterals as well. You need to include your clients. You do not make them gold plate their projects. You make them do it, a few things in a good way. You also mentioned the alphabet soup, the dreaded alphabet soup, and all the standards and taxonomies. I think we will touch a bit more upon that in the next questions that I will ask you. But I think the takeaway for me is that MDBs can also learn from private finance. Definitely, it's a two-way road. So with that, I would like to keep the conversation going, and I would turn back to you, Mahia, again. Now, we understand that Citibank Bangladesh has several clients in the power sector that are implementing PPP projects. How do you help your clients raise their understanding and capacity to comply with ES standards? How do you bridge between their knowledge and systems and the requirements to meet standards from IFIs? Could you share with us, for example, a journey of one of your clients and some of the key lessons that both you and them learned in doing this together? So over to you, Mahia.
Okay. To start with, Citibank actually is the only bank who are actually signed up for the Net Zero Alliance. So in Bangladesh, there are two organizations from the banking sector. We are the only one, and then there's one which is a non-banking financial institutions. So we invest a lot in capacity building of our own employees. We have energy experts, energy auditors from our staff, and then we go through the trainings through Deloitte and through IFC, and we train our staff who are actually interacting with the clients, especially the relationship managers who are visiting the clients, who are doing the inspections, who are going regularly to visit the factories. So while they're doing that, while they're going through the processes, and while they're going through the, is my mic making that noise?
It's a bit of background noise, but I think we can still hear you.
Okay.
Yeah.
So that actually helps to build up the capacity of the customers as well. So we also do train the customers. Like recently, we partnered with Deloitte and actually trained our customers for the capacity building on the ENS standards. And in Bangladesh, we have around 226 LEED certified factories. Among them, 26 are platinum LEED certified, but all of them are basically garments, manufacturing garments industries, as I said, because of the EU or whoever the buyer is, they make it a requirement that you have to go through all the LEED certifications and all that. Apart from that, with the central bank, what we do is we do the ENS, though central bank has a requirement that, they have a cap that above if the financing is above that capacity or the manufacturing industry is above that capacity, you have to do the NS. But we do it for 100% of our clients. The reason we do it is basically if they're certified as a green finance, if they're eligible for a green finance, and if they pass the assessment, and if they're eligible for green finance, then we can give them a subsidized loan. So like central bank refinances us, they're like, if I give you the example, like the interest rate is around 5%, where in the conventional interest rate is around 12 to 13%. So they get really a good rate for being, green and all that. So coming back to the question, the power plant, if I want to give you an example, like there's one customer, Regent Energy, it's a 150 megawatt gas-based power plant. So we were working with them. While they were setting up the factory, they have done as I said, we have to get a land permission or the land clearance from the government. So while we have helped them actually hire a consultant to do the assessment, and then after they did the assessment, then basically they give us the proposed plan of their project. So once we got the plan or the projects, what we figured was they did not meet the standards for like the air pollution and the sound, and basically these two standards were not met with them. So we consulted with the customer, the consultants, and the way they worked is like the sound. For the sound, they said you have to plant more trees across the boundary of the factory, and also the machines that they make the sounds, they said you have to haul them so that it doesn't pollute the sound so much. And the same was they had a problem with the air pollution because of there were like around 36 machines that would kind of put out what do you call that, poisonous like kind of gas into the air. So what the emissions, so what we have worked out with them, and what we said, and it was also I think there's a requirement that it has to be above certain level, high level, so that it kind of passes and dilates while you pass it on. So they could not build it so high as well. So what happened was we, instead of 36 machines emitting that air into the poisonous thing into the air, what they did was they kind of clubbed like 4 machines together. So what happened was there were 9 machines basically, which were now emitting in the air, and because of they were clubbing out the machines, the force of the air was higher, so automatically it went higher up into the atmosphere. So that's how we kind of worked with them. We gave them solutions, and we worked out, and they worked with the community. So when we are working with the community, they had to purchase or get some land from them. So we had to make sure that it's not, forced, and it's voluntarily given by the people around. And there were people generally, if the industries are outside the city, people are generally happy because that creates a lot of employment for them. So if it's totally in the rural level, they don't really understand the environmental impact. So those are being monitored by us, and we do every time the relationship managers or they're visiting, they visit with the experts and they do the monitoring with them. So that helps the organization also, the power plant, the Regent, also we are working with them continuously. It was not just, one time and we fixed it and then we just let them go, and, so it's a continuous process, it's a continuous monitoring, and we help them throughout the journey so that they be compliant, and we can, certify them as compliant, and we can finance them in a subsidized rate.
Thank you so much. I mean, what I can... Okay, I'm on, so I guess you can hear me. So, I mean, what I picked up from this very detailed example that you provided us was that a lot of it is market driven. So a lot of the ES improvements that you work on with your clients to achieve are market driven by the European market, which is very stringent. Training your clients as you train your staff. I mean, you're really at the forefront, helping them improve their, reduce their emissions, reduce their pollution. You're really with your clients, and
it's cost effective also. Like whenever
Absolutely.
you're training them for energy efficiency and all that, they implement and it helps them. So as they were saying, that you have to make them understand that it's just not following up the standards. It also helps you in your bottom line. So
absolutely, it's all about the bottom line. I think it's all about the bottom line. So that is definitely very commendable, Mahia. Now, Gergely, back to you. We discussed in the previous question the experience with your clients and how you help them manage their ENS risks. Now, let's turn to OTP internally. I mean, your institution has changed quite a bit on its vision, approaches, systems. We've heard that you're one of the regional leaders, and many in the audience today are beginning a similar journey, and I would really love to hear some insights from you over the last few years on how OTP has internalized its ENS management and sustainability within OTP's operations.
Okay. First of all, we call ourselves regional leaders, but that's really the Eastern European region, not the Central Asian. Hopefully, 5 years, 10 years, then I'll come back and we'll be regional leaders here. So what you have to understand about banks, and this is not specific to our institution, it's true in general. The environmental footprint of the banking operation, even though it's quite large, because we have headquarter offices, we have branch offices, we have cars, and we travel a lot. So even though it's large, it's very, very, very small compared to the impact we have on the environment through our financing. So it's comparable like to an apple and the apple tree. That's sometimes what I tell my children if they ask about this. That's the comparison. So obviously we make sure that our own operations are, we buy green electricity and we insulate and we have solar panels and change the cars and all this, and we promote public transportation. But that's really not the issue here. That's not the focus of what we do. The focus of what we do is we try to help our clients transform. Okay? Because if they transform, then we can make the apple tree healthy. Not only the apple that actually lives off the tree, right? So we live off our clients. We live off the economies that we serve, and those economies are transforming, whether they like it or not. There's one part of the transformation is the actual, what we want to do, transforming them to a low carbon economy and the investment and all this, and we really like to finance that. That's our role. But they're also transforming irrespective of whether they want to transform, because the weather is changing. It's as simple as that. We talk about climate, we talk about emissions and this and that. The weather is changing, and it's not only getting hotter, it's getting, you know all this. I don't have to bore you with the details. And the fact of the matter is that our built environment, the environment that we live in, is not built for this weather. It's not built for the weather that's only going to get worse. Even if we achieve all the Paris goals, even if we do everything right, it's not going to get better anymore, at least not for a very long time. So we not only have to transform, mitigate, we don't only have to make sure that we don't pollute too much anymore, we also have to make sure that we adapt to the new environment. So we change our built environment. And that's also a very, very important part of what we need to do, because that means that all of our clients, so not only the energy sector, not only the transportation sector, not only big real estate investing companies or clients like this, but every single client, even a simple person who's our client in Uzbekistan or Hungary or Serbia for that matter, they have something to do, because maybe they own a house, that house needs to be insulated. Maybe they own a car, and it's getting more and more expensive for them to upkeep that car, or whatever it is. Everyone knows from their personal life that there's something that they need to do, not necessarily for the environment. Obviously, it is for the environment, but not out of the kindness of their hearts, but in order to keep up the comfort level at which they live. Because again, the world that we built for ourselves, that we built for our comfort, that we built for our safety and security, is not fulfilling its purpose anymore. And I'm not only talking about the heat. The heat is one thing. I was in a session this morning, I think Alex was there also, where they showed these pictures of the floods in Mumbai recently. We currently have a lot of flooding in Central Europe, where I come from. I don't have to tell you about the droughts, about the water supply problems that some of the regions, actually in this region, face. So not only do we have to invest in infrastructure, and this is AIIB conference, so infrastructure investment, not only do we have to invest in the infrastructure of generating power and mobility and all this, we also have to invest in the infrastructure of how we live, to be able to live with the weather. And that works at the personal level, especially around real estate, the housing. If we don't, many times I heard today in this conference, I really like this sentence, that the sustainability challenge will be solved or not solved in Asia. That's definitely true. But similarly, if you turn in terms of industries, the largest challenge is definitely around real estate, the way people live. It's very distributed, so it's not easy to solve, but it's a big infrastructure problem. So there is a challenge on the personal level. There's a challenge on community, municipal level, especially around, preparing for extreme weather events. But also to ensure the safety and security of the people living there, providing clean water and all this. And there's obviously a challenge on the corporate level. There's a challenge on national level and even international level. So there's a lot of financing to be done, not only to make sure that we don't pollute anymore or pollute less, but also to adapt to the new weather, and maybe not irrigate the nicely got green lawn during the day, but rather have some insulation on the buildings. Sorry for taking so long.
No, absolutely. I mean, the unprecedented climate risks we're facing definitely are, a cause for concern, but absolutely every little helps. And I think you're doing your bit in trying to alleviate the challenges that we all face as humanity. Now, Rong, in your presentation, you showed us how do no harm and ESG risk management are, the core of all different standards and taxonomies, the so-called alphabet soup. Nevertheless, I mean, there are really numerous standards, both voluntary and mandatory, and the landscape is quite complex and, I'm sure it can be intimidating for financial institutions in the global south. So how does IFC approach, your interaction with clients that may be overwhelmed by all these standards or do not have the capacity to understand them and let alone implement them? How do you help your clients navigate these difficult waters in the global south?
Yeah, so I think there are two levels. One is on the MDB's standards, but I have to say my observation, I think MDB's in terms of the core standards are pretty much aligned. I have colleagues from OECD, from EBRD. I was in the policy team. That's one of my jobs, compare, all these different, I think the core environmental social issue and the long performance standard are pretty aligned. We heard complaints from our clients and some of them here as well. It's more on the procedure, sometimes the reporting templates, so that maybe need more coordination. One of my tasks when I was in the policy team, also looking at all the MDB and the DFIs, how can we harmonize even that, so the clients don't have to reporting different 12 templates. But I think that's, so one of, I think the fundamental of standard, I think pretty much on MDB, but now it's complexity of the regulation now. So that's what I spent in 39 environmental social risk management regulation in emerging market alone. EU could at least the regional approach. So that's also very important for IFC. Through the SBFN, we're helping with the regulators align with IFC performance, particularly IFC performance standard 1 on the financial sector. We did work with Bangladesh Central Bank together. I think that you mentioned that as well. I think it's very important with the new landscape of national environmental social regulation that in addition to complexity, there's different lenders, so we need this harmonization, at least interoperability and comparability, so the client's not lost in different requirements. So that's one complexity. Second, I think, Alex, you mentioned the capacity issue. I think the capacity is not only the capacity of financial institution, it's not the capacity of their clients. We did a little mapping of, we call it conceptual framework of capacity, gap of capacity. So we look at 4 areas to support the overall landscape of capacity. Number 1, regulation. Regulator also need to learn. They're bankers. This is also new areas. So we build the capacity of our financial institutions and to have to make them to be a better regulator when they regulate environmental social risk management. So the regulatory framework. And second is the financial institution, building the capacity. That's part of the technical system mentioned, global, regional, national level. And third, it's also the market. The bank said, yeah, we're ready. But we're not environmental social specialists. I think very few institutions, like IFC, will have more than 170 people in the environmental social risk management. So that building a market capacity, that there's pool of environmental social consultant, training firms. So when the banks are ready, they're ready to serve them. So that's the market capacity. We're also helping, working with the capital market, like the stock exchanges, to have disclosure regulation and environmental social regulation. So build a forms level. So when the banks are ready, their clients are ready because they are kind of investment ready about environmental social risk management. So I think we need to look at really kind of landscape of key stakeholders and building the kind of capacity gap in all different key areas. So that's what we're trying to do as IFC, as a standard setter and global convener and technical assistant provider.
Thank you so much, Rung. It's absolutely clear that providing tailored guidance and support is essential for helping institutions in the Global South. And yeah, I mean, you're doing quite a good job in capacity building, and I think we have the right person on the panel. Now, Alex, back to you. I would like to understand, how is AIIB working with FI partners that are facing multiple standards, and this is building upon what Rung has mentioned, We've got national regulatory frameworks, IFI, ENS requirements. So how does this work when your clients operate in other countries that are not their home countries? How does AIIB approach the flexibility that is needed, that you need, that your clients need in the application of ENS standards?
Thank you. Thank you, Ines. As Ron rightly mentioned, pretty much all the environmental and social policies of MDBs and generally international financial institutions aim to address pretty much the same environmental and social risks and adverse impacts. So our approaches, and if I look into our policies, we have roughly 70 pages of very principle-based policies, which offers a bit of flexibility and have certain specific provisions. Now, when we engage with the client, we tend to look into what the project is about. What are the risks? How these are addressed? What is the capacity to address these risks? Because our obligations to the management and to our board is to present a full, transparent, and objective picture of the project, regardless of what standards clients apply or regardless of. And obviously, if there are major risks, this needs to be mitigated, and the mitigation measures needs to be agreed with the client. So that means when we assess, we look into the substance. It doesn't matter what is the title of the standard. It doesn't matter how this is called. As soon as it serves the purpose and it's aligned with the principles of our policies, it's okay, and we can go ahead. But we need to understand the project. We need to know what this project is about. And based on that, we proceed further on.
That's amazing. Thank you, Alex, for sharing how AIIB works with your, FI clients and partners, and, your emphasis on flexibility and adapting to your clients' needs and, looking at the substance rather than, the smoke and mirrors of the different, yeah?
And if I may add a sentence, again, we need to understand also the market context where our client operates.
Yeah.
What are the functional elements which we can use? No need to duplicate if it works already. And then if we build on that, we have more chances actually to fine-tune here and there for the benefit of the project. And obviously, I'll touch also upon this as well. Gary mentioned about the houses, Mahia mentioned about the manufacturing industry, et cetera, SMEs. Why we MDBs need to invest through financial intermediaries? Because we are facing global climate emergency. So it requires all the economy to transform, to green itself. And many sectors of these economies are fragmented. So MDBs cannot reach otherwise rather than through financial intermediaries. So we need to leverage ourselves, we need to scale up, and we need to help these financial intermediaries. Thank you.
Great. So I think we will open the floor to last-minute thoughts to the audience once we've concluded the panel. So I can see your hand, and you will get a mic very shortly. But one thing I would like to do before, handing over to our amazing audience who are listening to us, although it's the end of the day, is to ask my dear panelists here with me to conclude the panel with one final thought or advice to the audience on the use of international ES standards by intermediary financial institutions. So, we have two representatives of multilaterals and two representatives of, the private side of finance. So could you leave us with 1 minute statement that everybody will remember and maybe put into action, as you return to your home offices? So Mahia, let's start with you.
Okay. Oh, sorry.
Yeah, we can hear you,
okay.
I think.
Basically, one is basically, as we were talking about throughout, that the alignment of the standards with the central government and the multilaterals, that is required, and people are working on it, and that's the faster it gets done, the better. Secondly is basically capacity building. Capacity building, one is on the awareness level. I think now more we need to move on to a technical capacity building. So whenever the clients, they need to have to know the tools of how to measure air pollution, measure their sound pollution, measure the water pollution, or that's if they're improving or it's decreasing, because their manufacturing capacity also changes and they use different chemicals. So they need to have continuously monitoring that. So I think the technical capacity building has become important, and they need to be probably need to be financed to build up that capacity, I think. So that's my final thought on that.
So capacity building, absolutely. Gergely, a thought from you, please.
When it comes to ENS standards, there's only one thought I have. Make sure it works locally for the client. It makes sense locally for the client, that's it. If that's there, everything else works.
Absolutely wrong, please.
Yeah, no, I think I leave our the discussion with two thoughts. Number one, I think it's mindset change. We have been this, particular for IC performance standards have been starting from developing and updating, and now probably moving to the next stage of performance standards. I think it's a mindset change, not regarding the performance standard or the standards as a compliance, and think about long-term view. And I think particularly when we develop a performance standard, it's not really for compliance. It's more a tool to have the clients manage risk, but also once you have the foundation, actually embracing opportunities. So think about managing environmental risk today, but it's actually for long-term view, for sustainability growth in the future. And the second that I can mention, really focusing on foundations. environment social risk management system. I mentioned the 9 key elements. Focusing on that, once you start the journey, have the first step, solid step. So I think things will evolving, and you're building capacity, and you learn from, from the doing, and eventually be there. So that's, I think, the 2 thoughts.
So it's like building a house. First you put the foundations, and then you put one floor, and then if you're feeling really feisty, you put on another floor, and then the roof. Alex, over to you, please.
3 words. Ambition. I genuinely believe we should go beyond compliance. We should strive for substantial contribution on environmental and social agenda. Second, diligent. We need to be very robust. We cannot have substantial contribution with skeletons in the cupboard or without addressing the basic safeguards. And third, partnership. Listen to work well together. Listen to each other. Understand the complexities of the other side. Thank you.
Thank you so much, Alex. And